Hello, everybody, and welcome to this week's bi-weekly community call.
We hold these calls every other Tuesday at 8 a.m. Eastern and 1 p.m. UTC. And you can always mark your calendars if you go to the Nexus Mutual Discord and see the DAO forum thread channel. We always have the most recent updates and events in there. Today, we have Brave and Hugh joining us from the Foundation and DAO teams. First off, we will have Brave, who will walk us through the Tokenomics Launch. After members' approval of the NMPIP 209, we now have the Ratcheting AMM mechanism live since 21st of November. We have 2 weeks already passed through with it, and we have some exciting developments on that front. We also have interesting news from Hugh as Unity Cover has proposed to enter an investment and retrocession agreement, which I'm really excited to learn more about. And then, as always, we'll have some general updates from the Foundation and review the last week in cover sales. Without further ado, let's get things started with Brave. Brave, the stage is yours.
Good morning, everybody. In this section, I'll provide an overview of the RAM's launch and performance to date. So we'll get started on the next slide. So after months of parameter discussions, solidity development, and audits and governance discussions, NMPIP 209 went up for vote on the 15th of November. Voting was open for 3 days, and members voted with more than 1.18 million NXM to unanimously approve NMPIP 209. So a few days later, the RAM was launched on Tuesday, the 21st of November. When the RAM launched, it replaced the bonding curve. It also removed the MCR Floor, which also eliminated the MCR lock that was preventing members from redeeming their NXM for ETH in the first place. So for those of you who aren't familiar with how the RAM works or what the RAM is, the RAM is made up of 2 virtual one-sided Uniswap V2 pools. And those pools determine the price at which the mutual is willing to buy and sell NXM in value accretive ranges for the mutual. This is also complemented by a price ratchet that enables price discovery. The below pool and above pool are the 2 pools present in the system. These pools contain a defined amount of ETH liquidity paired with virtual NXM. This creates 2 internal pools which have the same ETH liquidity. The NXM reserves in each pool are represented by a virtual NXM balance. The ETH and NXM balances change over time as NXM is sold and purchased. You can learn more about the RAM and the updated token model in the Nexus Mutual documentation. I'll move on to the next slide. But now that the RAM is live, members can redeem NXM for ETH right in the Nexus Mutual user interface under the NXM section. So on that page, you can redeem your NXM for ETH. There's also an option to unwrap any WNXM to NXM. While we endeavor to provide a safe and user-friendly user interface for the benefit of members, it is essential to point out and emphasize that the underlying smart contract governing WNXM is not associated with NXM and Nexus Mutual. This was a smart contract that was developed by a third party and is entirely separate from Nexus Mutual. Just be sure to do some due diligence and use caution. There's a disclaimer on that page that has a little bit more information that you can check out as well. But you can learn more about the RAM security and how members can redeem NXM for ETH in the blog posts on our website, which you can find in the banner on the website and in the banner in the UI. So I will move on to the next slide. Before I jump into an overview of the RAM's performance, I wanted to cover what the goals of the Tokenomics revamp project are, as set out in the Ratcheting AMM white paper. So now that the RAM is launched, the goal of the system is to bring the price of NXM used by the system and the open market price together again, allow members who wish to exit to do so directly from the protocol at a reasonable price, allow the protocol to capture capital when members wish to provide it, and create positive value for long-term aligned members. With that in mind, let's go over the RAM's performance to date. So the RAM launched 2 weeks ago, and members have been redeeming since the ratchet first moved the price close to book value on Wednesday, the 22nd of November. To date, 869,223 NXM have been redeemed for 17,377 ETH, which is roughly 39.5% of the initial budget allocated for the initial exit period. The initial exit period will be active until the remaining ETH in the initial budget is exhausted. And there's still another 26,706 ETH left in the initial budget, which is the remaining 60.5%. So if you're looking for some updates on the RAM's performance, there are two really great Dune dashboards that people can check out to stay up to date. There is the Nexus Mutual Ratcheting AMM dashboard, which was created by the R&D team, and the NXM dashboard that was created by Richard Chen. So there's been discussion on the forum as well about potentially updating some of the RAM's parameters. If you haven't already reviewed that post, you can find it on the Nexus Mutual Governance Forum. But for the most part, that concludes my review of the RAM, the launch, and the performance. I'm happy to take any questions if anybody has any before we move on. If there are no questions, then I will hand things off to Hugh to review the cover proposal on the governance forum. Hugh?
Cool, thanks, Brave. Yeah, this is a deal that we've been discussing with the cover team for probably about 9 months now. So it's kind of come together in the last month or so, working out all the details. But obviously, it's a pretty big proposal from the mutual's perspective. At the moment, we're writing about 800,000 to $1 million of kind of cover costs in a year. So like, I guess I'm not trying not to use the word premium, but the equivalent for a discretionary mutual. So that's this deal will kind of significantly increase that by about 10x or even more. So it's quite a material deal that we've been working on for some time. And so it is a bit complicated, but I just kind of want to run through the high level with people here because we're planning to put it to the formal governance vote later this week. There's a whole bunch of details on the forum. There's this essentially, the proposal is essentially giving the advisory board power to kind of enter into these arrangements on behalf of the mutual with Covery. It's going to be a mixture of technical on-chain stuff as well as legal documents that would need signing, and they would be signed on behalf of Terrapin International Foundation, which is the foundation that holds the mutual's assets. And so there's a combination of off-chain stuff and on-chain stuff going on here. And at a very high level, there are two main components to this. One is an investment into Covery, and the second is a retrocession. So I'll get into the details of Covery first. They are a Cayman Islands-based company. They're a reinsurer, and they cover a variety of normal business lines, so like property, auto, liability, a whole bunch of different lines. And so they effectively reinsure insurance companies, and they take on big blocks of business in one go. So they have about 6 or 7 deals that they've done, but each deal is like a portfolio of underlying coverage from different insurance companies. The business is a lot more stable than the stuff that we've written previously out of the mutual because it's basically it's already kind of diversified. It's got a lot of underlying risks underneath it, and so they're taking out a whole portfolio which has relatively stable and predictable claims each year. Obviously, there's still variability, but relative to the business lines that the mutual is running at the moment, which are very yes or no, does it pay out? It's much more stable and predictable. And I think in general, where Cover Re are at, they are at a point where they want to deploy, or they've got a lot of business opportunities to grow, but they need some capital to grow. And so the investment is a key component of this deal for them. It would allow them to grow their premium volume substantially. So they're currently, from my understanding, in the 30 to 50 kind of million range in terms of premium volume, and an additional capital could get them quite easily up to 100, 150, or even more. And so this is that's quite important from their perspective. And I guess the other side is the Nexus Mutual. Obviously, we have underwriting capital, we're ready to deploy, and we want to increase cover volume. So this is quite strategically very aligned at a high level. And Part of the challenge here is that they're a traditional insurance regulated company and Nexus Mutual isn't, obviously on-chain DeFi, and how do we kind of bridge those two worlds together? And this kind of deal as a whole is a way to do that, and that's essentially what we're trying to do here. Yeah, so to give you a bit of an overview of the structure, so this contains the two components. On the top of the diagram, you can see the investment component, which is pretty simply an investment into Cover Re SP1, which is the specific vehicle legal entity, and that will basically allow Cover Re to grow their volumes, their premium volumes. And so this is structured as a participation note. It's kind of basically the investment can get fully wiped if there's bad claims experience. So it is kind of variable, but there's also upside as well. So it is variable, but the expected returns are probably somewhere in the 18 to 20% return on stable coins. So it could be a bit higher than that, but like we've conservatively estimated it at that level. So that's kind of the 12 million investment. Then additionally, there's the retrocession. On the investment side, essentially we'd be looking to sell 12 million of ETH for stable coins. That's kind of the, I guess, one of the big aspects of this. But on that point in particular, I've seen comments from several members that they would probably be willing to borrow against ETH to get the stable coins to maintain the ETH exposure. So I'm going to be talking to a bunch of other members over the coming days before putting this on chain to see if that is a more palatable option rather than selling the ETH. Notwithstanding that, kind of went through the kind of ROI, expected ROI on the deal. In terms of the technical requirements, this is essentially we have to create a token that represents the off-chain investment, and it will sit in the capital pool, and that would need an oracle. So there's a different set of trust assumptions here, but essentially we are taking some money off-chain out of the capital pool, and that's something that members would need to be aware of and agree to. So that's kind of the two main aspects here. It's relatively simple, but it's got a quite high ROI. One of the interesting parts about this is that to me, the interesting part from Nexus is really the retrocession part of the deal. But to access the retrocession part of the deal, we actually need to do the investment as well. They kind of come as a package. So moving on to the retrocession, the idea here is that we would take 15% of the underlying business that Cover rewrites in 2024. So basically, same terms on the entire book. We just take 15% of it, capped at 15 million premium. And the expected margin on this deal is a bit lower, is lower than our usual stuff, but it's much more stable. And so it's going to be about 1.7 million of expected margin on a gross premium of 15. The net premium, which is what we would actually get in revenue, is something like 11 or 12 from memory. So it's probably the numbers to reference are 11 or 12. 1.7 on 11 or 12 gives you the margin. One of the interesting aspects of this deal is that the losses would be capped at 3 million above net premium, so we can never lose more than 3 million above what the retrocession premiums would be. The reason we can do this, this requires approval by SEMA, which is the Cayman Monetary Authority, so the regulator, and they require us to essentially post 3 million of collateral in a trust account, which is owned by Nexus, but it's at the call of Cover Re, it's basically that corresponds to the total losses that we could incur on this deal. And what that means is if Nexus doesn't pay out in line with the terms and conditions, then they can go after the collateral. So it's kind of removes the regulatory risk of dealing with the funny DeFi thing over here that they're not quite sure about. And so this is kind of it's obviously not ideal from our perspective. It takes more money off chain, but it's kind of what we would need to do to be able to bridge into more, I guess, traditional insurance space. And so I think this is a very interesting aspect of things because it could serve as a blueprint for future deals about us being able to access traditional insurance markets in kind of like the way that Maker kind of does their real world assets and stuff like that. It's obviously different legal structures and all the rest of it, but I guess at a high level, it's kind of the equivalent in the insurance world. There is one other aspect that members should be aware of here, and that's we're going to operate this on a funds withheld basis. So, and what that means is the cover re wouldn't pay cash for the premiums up front. They would pay the net result of premiums less claims at a later stage once the deal has like the experience of the deal and the claims have come through and we're confident that what they're going to be. And that's quite important. It's necessary for cover re because they operate on funds withheld basis with the underlying insurance company. So if we didn't as well, there'd be a cash flow issue that they wouldn't be able to pay the premiums. And also it helps deal with the credit risk. So there are two non-standard things as part of this deal. One is the funds withheld and the other is the collateral. So those are the two things that members need to be aware of. The funds withheld is an interesting point because developing this payment token could be used for other deals as well. So it's not just a one-off thing for cover re. It could be more widely useful for other deals in the future. So I guess where we're at in terms of the process, we're just having discussions at the moment. I think I've received quite positive feedback, both on the forum, but also not on the forum, just directly. And that with, I guess, one of the bigger outstanding points being, do you sell the ETH into stables or do we essentially borrow to get them? And so I'm just going to do a few extra discussions on the next couple of days. And the final proposal that goes on chain may be either swapping into stablecoins or borrowing. So that's basically the only change that would be proposed so far as a result of the discussion so far. So that was a very quick, I guess, whiz through of cover re, but I'm happy to take any questions on that. Cool. I think that is no questions, but yeah, please follow up on the forum or in Discord or wherever you'd like, and happy to answer them there. In terms of the foundation update, honestly, the last 2 weeks have basically been shipping the RAM, doing the monitoring, making sure everything's okay, and also the cover re aspects of the deal and making sure that we do get into the technical requirements that will be required as a result of that. So there's definitely a lot going on, but those are probably the two main focus areas right now. They're obviously the big things that are happening with the mutual. So I think I probably could go into a whole bunch of other smaller things, but those are probably the big ones. I guess personally where I'm seeing things going at the moment is we have the RAM. It's obviously just launched. We're monitoring it, looking at how it's going. The kind of initial budget will probably be exhausted in probably about 6 weeks if it keeps going at the speed it's going. And that kind of puts us into early January, and then once we've kind of done that, we'll understand where we're going with cover re, and I think it sets up a really good baseline for the mutual to really explore growth in the next phase of growth. We kind of have the tokenomics working. We've got a potentially large deal on the table that could serve as a blueprint for future deals, and we potentially have the starts of a more positive, maybe it's a bull run, maybe it's not, but whatever. The crypto getting some more attention and things like that. So I think the mutual will be very well positioned going into 2024 for growth, and I think that's where we're going to be focusing the foundation. So kind of ticking off a few things in the lead up to Christmas, and then have a good platform for 2024. That's the kind of main update from my side. Again, happy to take questions. Let me know.
Thanks, Hugh, for the presentation and the updates. It's so lucky that we're ending this year on a positive note. It's been a quite hardworking year for the Nexus Mutual teams, and I'm looking forward to the next year. Bring more excitement to our community. Let's look at the last week in numbers, and then we will have the open forum and wrap up the call. Last week, we sold more than $3 million of cover, and members earned more than $14,000 in fees. topping our list in cover sales is the retail mutual, who has been purchasing cover from Nexus Mutual since July. We have seen consistent cover buys from them in 2023, and we hope this trend continues in the next year. If in case members don't know, they are a UK-based mutual of more than 2,000, if I'm not mistaken, small businesses, and Nexus Mutual effectively helps these businesses cover themselves from accidental damage, fire, and theft. We have an active cover amount of more than $37 million, and this figure has been hovering at this level for the past 2 weeks. In case you want to learn more about our weekly numbers, please check out the thread on forum. We have updated the last 2 weeks analysis on there, and you can find all the links mentioned during this call in the resources section of this call's thread on the DAO forum. Now I want to open the space up for members' questions. If you have any questions or want to address any topics that weren't addressed during the call, please let us know. We'll be happy to answer any open questions. If there's nothing now, I will wrap up this call. Please remember you can reach us on the Nexus Mutual Discord anytime. And thank you for joining us. Our next call will be on probably in January 2024. We'll be on a small break in the next few weeks. And we hope to see you in the next year. Happy holidays and take good care. Bye.
Thanks, everyone. Bye.